Greetings, everybody. Welcome to Liberty Call. It is Thursday, October 20th, 2022. I apologize for missing a couple days. Had some appointments that were away from the office, and it would have been really late, so I just didn't run those videos. But not the greatest day in the market today. We've had a couple of up days, and things have kind of slowed down. It was everything was in the green this morning, and then things took a little bit of a turn here in the afternoon. So if it's your first time watching, give me some big old thumbs up, like, share, subscribe. I would greatly appreciate it. And let's go ahead and jump into the financial numbers. The Dow Jones for the day was down 0.3%, closed at 3333. S&P 500 was down 0.8, closed at 3665. NASDAQ down, excuse me, 0.61%, closed at 10614. Small caps were down about 1 1/3. The VIX held it flat, right around 2998. Moving over to Canada, they were down 0.51. Brazil was up 0.77, and Mexico was up 0.21% for the day. Head over to Europe. Germany was up 0.2, UK up 0.27, France was up 0.76, the Euro Stoxx was up 0.62, Netherlands up 1.03, Spain up 0.8, Italy up 1.07, Switzerland down 1/10%, and Portugal was up 0.74. So it looks like most of Europe was in the green today. The Russian markets were both up. MOEX was up 2.38 and RTSI was up 3.1. Moving over to Asia, they were all basically red. Japan was down 0.92, Australia down 1.02, New Zealand down 1.28. In China, the Shanghai was down 0.31, the SESE component down 0.56, the China A50 down 0.78, DJ Shanghai down 0.43, Hang Seng down 1.4, and the Taiwan weighted came in down 0.24%. So mostly red across Asia, green across Europe, and mostly red here domestically. So again, not the greatest, but again, we've been in this downturn for a while, and until it bottoms out, I think we probably just have a little bit more of the same. So, all right, well, let's dive into today's market recap. S&P 500 gives up gains amid rising Treasury yields and Tesla slump. The S&P 500 gave up gains Thursday as rising Treasury yields weighed on investor sentiment, just as the bulk of quarterly results continue to suggest corporate America is in better shape than feared. The 10-year Treasury yield jumped to a fresh 14-year highs as investors weighed up fresh remarks from the Federal Reserve officials calling for the central bank to remain the course on rate hikes, which we hope they do. Citing a, quote, disappointing lack of progress on curtailing inflation, end quote, Philadelphia Federal Reserve President Patrick Harker said he expects interest rates will be well above 4% by the end of the year, and I don't doubt that is going to be the case. The remarks come as fewer than expected weekly jobless claims pointed to strengthen the labor market, heightened concerns about ongoing wage growth. Quote, demand for labor remains quite strong. It remains the case that workers who are let go are still having a relatively easy time finding a new job, end quote, Jeffrey said in a note. Tech stocks managed to cut losses but remained under pressure as rising Treasury yields make growth corners of the market, including tech, less attractive. International business machines, or IBM as we know them, however, bucked the trend to rise more than 4% after the tech giant reported quarterly results that beat estimates on both the top and bottom lines. Tesla, meanwhile, fell more than 7% after a miss on third quarter earnings, though some on Wall Street touted optimism ahead of the EV maker after management said they are considering initiating a stock buyback. Quote, we are encouraged that management is considering a $5 to $10 billion buyback and believe it is a constructive use of cash, end quote, Oppenheimer said after lifting its target price on the stock from to $436 from $432, so a little bit of an increase. Quote, we believe the depth of demand is outstripping most investor expectations, even when considering a looming recession, end quote, it added. The broader market was also pressured by a fall in travel stocks as investors weighed up quarterly results from airlines and railroad companies. American Airlines reported quarterly results that beat estimates as travel demand continued to recover, but its shares fell more than 3%. Railroad stocks were hurt by Union Pacific's weaker outlook on carload growth and stock repurchases, which offset quarterly results that beat the top line numbers. Elsewhere, AT&T rallied 7% after Telecom reported better than expected earnings and revenue and lifted its outlook on full year earnings to $2.50 from $2.46 per share previously. So again, it's kind of a mixed bag these days. Some things are good, some things are bad. So, all right. Next up is the jobs numbers. The number of Americans filing new claims for unemployment benefits fell unexpectedly last week, indicating a labor market remains tight even as demand for labor is cooling amid higher interest rates. Initial claims for state unemployment benefits fell to a seasonally adjusted 214,000 for the week ending October 15th, the Labor Department said Thursday. Data for prior week was revised to show 2,000 fewer applicants filed than previously reported. So again, some good news there. Economists polled by Reuters had forecast 230,000 applications for the latest week. The government reported earlier this month that job openings dropped by 1.1 million, the largest decline since April of 2020, to 10.1 million jobs on the last day of August. The claims report also showed the number of people receiving benefits after an initial week of aid, a proxy for hiring, increased 21,000 to 1.385 million for the week ending October 8th. So extended claims went up, initial claims went down. So again, it's kind of a good news, bad news situation today. All right. Next on the agenda is existing home sales. They fell. Existing home sales fell for the 8th month in a row in September, posting the longest streak of decline since 2007. However, the declines in August and September have been the smallest so far in 2020. The prime culprit is the surge in mortgage rates, which are now above 7% for the first time since 2000. And part of the seasonally adjusted prices typically begin to fall following the summer buying season. And even with the recent declines, the median prices of homes are still up 8.4% for this year. All right. And if you want to read through the entire article, it will be linked in the show notes page. All right. Last up is news on the new tax brackets the IRS is going to be providing. IRS new tax brackets and standard deduction could save families hundreds or even thousands of dollars. Now for the bad news. You can't put that refund, you can't put a tax refund in February 24 into your gas tank, one lawyer said. All right. So the payout on the standard deduction is jumping up, first, let's go ahead and look at the new tax brackets this year for 10, 12, 22, 24, 32, 35, and 37. So let's just pick out some of the middle ones that most people fall into. If you made more than $41,775 or $83,550 married filing jointly, you would currently be below the 22, or you'd be in the 12 to 22% bracket. So for next year, that's going from $41,775 for single to $44,725, and from $83,550 for married joint to $89,450. Is once you cross those thresholds, you'd be in the 22% bracket from the 12% bracket. And for those making a little bit more, the 24% bracket this year started for single payers at $89,075 and is going to $95,375 next year. And for married filing jointly, it is was for this year $178,150 is going to $197,750. So about $12,000 for those married folks. Increase before you be bumped up into that 24% bracket. So again, a little bit of some tax savings. Also, the payout on the standard deduction is jumping 7% from 2022 to 2023. The IRS numbers show the standard deduction becomes $27,700 for a married couple filing jointly, an $1,800 increase from the payout slated for this year. And it's $13,850 for individuals and married couples filing separately, a $900 rise. So just some examples: a married couple with a taxable income of $200,000 in both 2022 and 2023 would see a reduction in their tax of nearly $900. Woo! And a couple at $500,000 income, which there's not as many of those, would see their tax bill fall by $3,700. For single taxpayers at those same income levels, their tax bill would be reduced by roughly $1,400 and $1,900 respectively. And the larger standard deduction also means a bigger tax break as more income is automatically exempt from tax. The flip side of this, though, is that it's going to be harder to itemize your deduction starting in 2023. And that means your tax payments, mortgage interest, and charitable contributions are less likely to provide you a tax benefit. And then last up, we don't have any numbers on retirement account contributions. That is the big question as far as how much the IRS is going to let savers sock away into the retirement accounts like their 401ks and IRAs, and the income thresholds for possible deductions. This year, individuals could put up to $20,500 into their 401k, an increase from $19,500 last year. And catch-up provisions for those over 50 another 6,500 for a total of 27,000 for this year. An IRS spokesman confirmed the agency has not released the 2023 contribution limit figures. Both Stefan and Gleckman said the chances are good the increases will be sizable in light of the inflation adjustments to other provisions. So, all right. Well, that is everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. And please, again, like and share this video with all your friends and family. I'd greatly appreciate it. And be back tomorrow with the weekly wrap-up. So you have a good evening. Bye-bye.